Good morning. A warm welcome to each one of you who all are present here. We have all joined here today for a workshop on Budget Analysis 2025 organized by the National College of Jayanagar, Department of Commerce and Management with an initiative of IQSC. Now, I welcome and request all the dignitaries to come to the dais and kindly take their seats. So. To begin the workshop with a positive start, I invite Pranav, second year BCom, for an invocation song.
Hello, check. ನಾಮವಿದ್ದರೆ ಸಾಕೋ ರಾಮ, ನಾಮವಿದ್ದರೆ ಸಾಕೋ ರಾಮ, ನಿನ್ನ ನಾಮವಿದ್ದರೆ ಸಾಕೋ ರಾಮ. ಮುನಿದರೆ ಮುನಿ ನಿನ್ನಾಣಿ ಶ್ರೀರಾಮ, ಮುನಿದರೆ ಮುನಿ ನಿನ್ನಾಣಿ ಶ್ರೀರಾಮ. ರಾಮ ಶ್ರೀರಾಮ, ರಾಮ ಶ್ರೀರಾಮ. ಹೊತ್ತಿದ ಪಾಪವನ್ನೆಲ್ಲ ಚಿನ್ನ ಚಿತ್ರವ ಮಾಡಿ, ಹೊತ್ತಿದ ಪಾಪವನ್ನೆಲ್ಲ ಚಿನ್ನ ಚಿತ್ರವ ಮಾಡಿ ಖಂಡಿಸಿ ಬಿಡುವ ರಾಮನಾಮ. ಎದ್ದರೆ ಸಂಗಡ ಬರುವ ರಾಮನಾಮ, ಎದ್ದರೆ ಸಂಗಡ ಬರುವ ರಾಮ ರಾಮ. ಮುದ್ದಿಸಿ ಮುಂದಕ್ಕೆ ಮುಕ್ತಿಯ ಕೊಡುವ ನಾಮ, ನಾಮವಿದ್ದರೆ ಸಾಕೋ ರಾಮ. ಜೈ ಜೈ ರಾಮ್ ಜೈ ಜೈ ರಾಮ್, ಜೈ ಜೈ ರಾಮ್ ಜೈ ಜೈ ರಾಮ್, ಜೈ ಜೈ ರಾಮ್ ಜೈ ಜೈ ರಾಮ್, ಜೈ ಜೈ ರಾಮ್ ಜಯ ಜಯ ರಾಮ್. ಥ್ಯಾಂಕ್ ಯು.
Thank you, Pranav. Now I invite Dr. C. Vijayalakshmi, Principal, the National College Jayanagar, to deliver the welcome speech.
Good morning, everyone present here. Today, we all have gathered here for a workshop on Budget Analysis 2025 organized by the Department of Commerce and Management, an initiative of IQSC. So, first of all, I would like to congratulate the Department of Commerce for organizing such a nice workshop, which is the need of the hour, because recently budget was released and we need to understand what exactly it is, and this is actually very interesting topic for all the students, not only just BCom, BA students also require this understanding of budget 2025. So on this note, I would like to welcome first of all the resource person of today's workshop, CA Suryakanta Devadigabi, Chartered Accountant, Suryakanta Associates. Welcome, sir. I am sure that sir's insights will provide comprehensive understanding of budget analysis 2025. I would also like to welcome Professor Cheluvappa, College Council Secretary, on this occasion. Now, I would like to welcome Professor Gururaj Rao, HN, HOD of the Commerce Department and Management. In his absentia, I would like to welcome him. He is going to join us very soon. My heartfelt welcome to Dr. Venkatesh, who has taken the initiative in organizing such an interesting workshop for all the students of commerce. I would like to welcome the faculty members of the Department of Commerce, Professor Nagamani, Professor Pushpa, Professor Sheetal, and the other people. And I would like to welcome Dr. Nagachampa Jain also, who is with us today. My sincere welcome to all the students, and you are supposed to be very active today and ask sir many questions, get the doubts clarified, because it is an interdisciplinary subject which you need to understand. It's not just for commerce students, everyone is supposed to understand the budget analysis of 2025. So with this, I would like to wish you a good luck, happy learning to you.
And I also welcome Dr. C. Vijay Lakshmi, Principal, the National College of Jayanagar. Ma'am, thank you for welcoming the gatherings. Now I invite Professor Nagmani PL, Department of Commerce and Management, to introduce the today's resource person.
Good morning, everyone. It's my immense pleasure to introduce today's resource person, CA Suryakant Devadiga sir. Sir is an esteemed professional with over 13 years of experience in practicing chartered accountancy and corporate governance. He holds a bachelor degree in commerce from Bangalore University, have studied in Vijaya Evening College, Baswangudi. He became an associate member in ICI in 2012 and is also a qualified company secretary, having completed his certification in the year 2010. As the founder and principal practitioner of Suryakant and Associates, he has established a highly regarded practice over a diverse range of services. These include internal and statutory audits, financial analysis, business forecasting, and performance reporting. Throughout his career, he has developed experience in representing clients before various tax authorities, including Income Tax Department. He has successfully appeared in both direct and indirect tax assessments and represented clients before the Commissioner of Income Tax and the Income Tax Appellate Tribunals. His professional expertise combined with his deep understanding of taxation, corporate law, and regular compliances has made him a trusted advisor for business seeking strategies, solutions to complex financial and legal challenges. We are happy to have you, sir. Thank you for coming.
Without further delay, I would like to invite our resource person, CA Suryakant Devadiga B, to share their insight with us, sir. Sir, the stage is.
Hello. Good morning, everyone. How is the Josh? Good, good. So, shall we start? First and foremost, thank you very much, National College, for giving me an opportunity to discuss Union Budget 2025. Before starting union budget, first we need to understand what do you mean by budget. Anyone in the crowd know about the budget? Just meaning about budget? What do you mean by budget? Some thoughts. Sorry? Planning? Yes? Planning what? Future expenditures? Future incomes? Savings? Very good. Good round of applause, please, for him. There should be some sort of interaction to make the subject more interesting. Correct? So let us see what is the definition of budget. As per CIMA, a quantitative statement for a defined period time which may include planned revenue, expenses, assets, liabilities, and cash flows. Here we have to understand first is it's a quantitative statement. It is not a qualitative statement, right? Like we are not discussing anything about a development. We are not discussing about anything about the qualitative aspect. It's numbers. Major things all about the numbers. It includes planned for a defined period. Defined period means specifically for a month, for a year, for some specific period we discuss. And what and all it includes? It includes revenues. What do you mean by revenues? Incomes, receipts. What do you mean by expenses? What you spend. That is expenditure. What do you mean by assets? Assets you acquire through your savings. Correct. And liabilities. What are all your liabilities? So while doing a budget, you need to understand all of this. Liabilities payable, rightly said. Even the cash flows. Cash flows, what comes in, what goes out. So putting everything in a statement, we call it as a budget. If I don't have a sufficient amount to pay, what you will do? My salary is 10,000 rupees. My expenditure is 12,000 rupees. What do you do? Absolutely correct. I have to go for a loan. Similarly, these are all we are seeing like a household expenditure, an individual perspective, how the budget will work. Similarly to as a India, if I see, so same things will reproduce it in a union budget. But when it comes to union budget, there is a methodology in which it should be drafted, it should be presented. Presented before whole of India. Is it not? So let us move on. First we need to see where does this budget is there in the Constitution of India. Anything for the government to have should be there in the Constitution. Without there in the Constitution, whatever act you will do, it's an ab initio. It is not a valid thing. If you go to the Constitution of India, you don't find anything about a union budget. The term union budget, you don't get it. But term you will get it like in the Article 112 of the Constitution, we get the term annual financial statement. That means a budget. So that says, according to the Article 112 of the Indian Constitution, the union budget of the year is referred to the annual financial statement, a statement of estimated receipts and expenditure of the government of India has to be laid before the Parliament in respect of every financial year which runs from 1st April to 30th March. See, we just see what you mean by the budget, where we have specifically covered, it is a quantitative thing and it is for a specific period. Here also you can see estimated receipts and expenditures are there. but it's for government of India. And also see the specified period 1st of April to March 30th. So now we understood from the constitution where does budget comes from. Just to move on. First, let us see the history of union budget in India. Do you know who is the first person who introduced income tax to India? It's not the right one. It's James Wilson in the year way back in 1860 who introduced income tax to India. He is from East India Company. Why? That time there was no independence to India. Correct? So who is the first finance minister who presented budget after independence? Anybody? It is R.K. Shanmugam Chetty in the year 1947, just after the independence, 26th November 1947. We need to know all these things. Why? Because we are just not talking about the union budget. We should know what is the history of the union budget. Is it not? Correct? So, many of the people may not be aware that who is the first person who has presented the budget. So, this is the person who presented first budget of India after independence. So let us go and see some more facts about the budget, union budget. Longest budget in terms of time taken. Any guesses? Any guesses? You can give the wild guesses, no problem. So Nirmala Sitharaman is the longest budget. You can see the duration 2 hours 42 minutes in the year 2020-21. And in terms of longest budget, in terms of words, any guesses? Sorry? Manmohan Singh. So total words used is 18,700 words in the year 91-92. I think that time somebody said Manmohan Singh. Correct, no? But is the longest budget in terms of words if you go. So he is a person. So coming back to some more facts. Who presented the more budget is Morarji Desai. Totally he presented 10 times from 1952 to 1969. Shorted budget similarly is H.M. Patil. Number of words used only 800 words in the year 1977. Similarly, who has presented more consecutive union budget? Any guesses? It is Nirmala Sitharaman. Just now what she has presented is the 7th consecutive union budget, surpassing Morarji Desai, who has presented 6 union budgets. So these are the facts. So these are the list of finance ministers who have presented budget after independence, starting from R.K. Shanmugam Chetty to Nirmala Sitharaman. After seeing all these facts of the budget, let us move on to what are the documents presented before the parliament. See, we normally know, like in a parliament, one budget speech will happen. When it will happen? 1st February. Every year, 1st February. That has been changed. Earlier, it used to have on 28th of February, last day of the February month. From 2017 onwards, that has been presented on 1st February of every year. So let us see, apart from the budget speech, what are the other things will be there? First and foremost, as we discussed, like budget speech. The second one, annual financial statement as per the Article 112, that is already dealt with. Even the next one is demand of grants as per the Article 113. Finance bill as per Article 110. Then even fiscal policy statements, which includes macroeconomics framework statement and fiscal policy strategy statements. See, these are the important documents which will be presented before the parliament. Okay? So, we got to know what are the documents. Then now we will discuss what is the process in which the budget will be placed. As we discussed, like it will be presented first before Lok Sabha. Speech will happen and other whatever documents we have just discussed, everything will be presented at Lok Sabha. There will be general discussion about the budget papers, like which is correct, which is not correct, which sectors have been prioritized, and where people, the elected people can ask the questions, ask the clarification. Those general discussion will happen. Even that also presented before Rajya Sabha. Here very importantly you have to see, like Rajya Sabha voting will not happen. For approval of all this budget, in Rajya Sabha it will be placed, it will be discussed, but voting will not happen. They may give suggestions. Whether to take or not, it will be decided by the Lok Sabha. Then standing committee, there are scrutinizes happens in a standing committee. Later it will move to the demand of grants, then appropriation of a bill and finance bill will be passed after voting. This is the process in which a budget will be done. Moving on to the union budget, let us see what are the components which are there in the union budget. See, majorly it will be divided into revenue budget and capital budget. Normally, if you distinguish this revenue and capital, revenue will be for the short term, capital will be for the long term. Revenue, normally it will be of a P&L item, capital will be of a balance sheet item. So if you further divide into the revenue budget, revenue expenditure will be there, revenue receipt will be there. Is it not? So even if you go to the revenue receipt, there will be tax receipts and non-tax receipts. Tax receipts majorly from direct taxes, indirect taxes. Non-tax receipts majorly from interest earned, dividend, shares of profits, investments, like if government invests in a public sector undertakings, so if you receive any dividend out of it or any profit out of it, everything will be a non-tax receipt. Those are all not tax receipts. Those are all the non-tax receipts. Do you know, like, what is the difference between direct taxes and indirect taxes? Anybody? Anybody? Direct taxes and indirect taxes? Sorry? Okay. See, direct taxes, we need to understand first what is the difference between the direct and indirect taxes. Impact and incidence on the same person, we call it as a direct taxes. Example, income tax, wealth tax, correct? So incidence, the liability to pay lies on the same person is a direct taxes. Indirect taxes, incidence and impact on two different people are indirect taxes. Example, sales tax, GST, absolutely correct, customs, excise and so on, correct? So these are the major differences that we need to know, like between the direct taxes and indirect taxes collection. So I think, hope all are you getting, like from the union budget, what are the, we have two, like revenue budget and capital budget. In revenue receipt, we understood tax receipt, non-tax receipt. In tax receipt, direct and indirect taxes. And two more components are there. Normally, when union budgets are presented before the parliament, we have two parts. Even if you observe the speech, she says specifically part A and part B to the annexures, she says. So we need to understand what are the things are there in part A and part B. Normally speech will starts with part A, ends with part B. Part A normally have the government schemes, sectoral priorities, resource allocation. That we already discussed. What are the schemes governments are coming up? What are the sectoral priorities the government is giving? What is the reallocations of the resources are happening? When it comes to the part B, the tax proposals, income tax revision, income tax changes. So we are very keen on the part B, tax proposal. How much we can save. Is it not? So this is the components of the budget. Moving on, let us go back to the budget, like as I was discussing, like revenue budget and capital budget. In the revenue expenditure and revenue receipt, the projected expenditure for this union budget is a 39.4 lakh crores. Projected revenue is 34.2 lakh crore. So expenditure is more and income is less, then resulted into deficit. We are under the revenue deficit of 5.2 lakh crore. So we were saying deficit. So what do you mean by deficit? When the income is lesser than the expenditure. If the expenditure is more, then it results into deficit. Moving further, we have different kinds of deficit. We need to understand. See, normally in the newspaper they say deficit budget. First we need to understand what do you mean by deficit. We understood what do you mean by deficit. When my expenditure is more than my income, then it's a deficit. There are different kinds of deficits like fiscal deficit, revenue deficit, primary deficit. Fiscal deficit is both put together, capital as well as revenue. So that is coming to 4.4% on GDP. When comparison with the previous year, it was 4.9%. So there is a certain amount of development which has happened with respect to the deficit. So it has been reduced, that expenditure percentage have been reduced. Similarly, revenue deficit, as we already discussed, like only considering the revenue receipt and revenue incomes. So that deficit is 1.5% on GDP, previously 1.8% in the previous year. Coming to the primary deficit is nothing but fiscal deficit less interest payout. Government might have taken loan. For the loan, it might have repaid some of the interest portion. If you deduct that interest portion, that we call it as a primary deficit, that is coming to 0.8% on GDP. The previous year it was 1.4%. So it means to say we are paying less interest compared to last year. Definitely it will be a sign of improving economic condition in India. So we are putting now like all the percentages like 4.4% on GDP. But we have not discussed anything about the GDP. What do you mean by GDP? Gross domestic product. Wonderful. Wonderful. You have answered now. So first we need to understand what do you mean by gross domestic product? Meaning of gross domestic product? Everybody knows what is the expansion of GDP. Correct? So we need to look into what do you mean by GDP. See, gross domestic product is a total monetary market value of finished goods, services produced within a country. What is the total? What is the total of the services which we are rendering as a country as a whole for a specific period? That we will term it as a GDP. There is a calculation on GDP. GDP is equal to C plus I plus G plus X minus C. It is on the expenditure front, how much consumption will do, investment, government spending and exports and minus imports. That also a calculation perspective, how a GDP of a specific country will be determined. Here the nominal GDP is estimated to grow at 10.1%. It's a huge number of GDP. So that is expected from India. So it is very good development. Even it has achieved 6.7% in the previous year. So that is also a wonderful achievement. This happens only through economic developments and measures taken by the country. When we talk about the GDP, let us see sector-wise who are all contributing to the GDP of India. See, agricultural, if you see, 17.66% is contributed by agriculture. Industry is 27.63. Services is 54.71%. Like in India, 40 to 50% people are engaged in the activities of agriculture. But still, see the GDP portion, it is contributing only 17.66%. So it means to say it is not doing that better compared to other sectors. That is the reason why in every budget, if you see, priority is given to agriculture. Even exemption is given to agriculture. Isn't it? So even other, in agricultural, even industry, if you come, there are contributors of industries, mining, quarrying, manufacturing, electricity, gas, water supply, other utility services, even the construction. Services are the major contributor of a GDP of the country. If you see that contributors like hotels, transport, communication services related to broadcasting, financial, real estate and professional services, public administration and defense and other services. So this gives us which are all the sectors who are contributing to India's GDP. So if you see GDP as an international level, see we are at the 5th place, just after Japan. First place goes to the US, China, Germany, Japan. Next, we are in 5th place. So most probably we can cross Germany and become 3rd place. So that is the near future plan of India in terms of GDP. We were discussing about the fiscal deficit. Like you can see the chart, it is tending down. So it is a good development? Yes, definitely it is a good development. See, in way back 2020-21, we had 9.2% of deficit. This is because of the COVID-19 pandemic situation where our expenditures were more than our income. Correct? Nobody has the income that point of time. So that is the reason why it went up to 9.2%. Then drastically it came to 4.4%. It's an achievement, I can say, from the income from the India. Now let us understand the actual budget, where the country is getting the money and how it is spent. So I have put it in a pie chart. So major, if you see, borrowing and liabilities, we have taken it from as a loan, 24%. Income tax collection is 22%. GST and other taxes is 18%. Corporate taxes is 17%. Non-tax receipts, which we have already discussed, is 9%. Union excise duty is 5%, customs 4%, and non-debt capital receipts is 1%. So these are the receipts of the country. How like major it is borrowings only as we don't have sufficient money to run. So we are getting a loan. So that is a major. And later definitely the taxes collection from India, both direct and indirect taxes. So and the rest of the things are very minimum. Now we understood like what are the total receipts. Let us understand where we are spending the money. So this is the payments. Like majority is interest payment. Like when you have taken the loan, definitely the maximum portion will go to the interest. So interest that is coming up to 20%. In a country like India, this 20% is too high. So government is trying to reduce it down and down. And other central sector schemes, 16% state shares of taxes and duties is 22%. See here, like if you see like state shares we are mentioning. When it comes to the GST chargeability, we have 3 taxes like SGST, CGST and IGST. SGST goes to the state, CGST goes to the center, IGST will be divided among state and central. That portion if you see, major is 22% is going to the states. Even major subsidy is 6%, financial commission 8%, pension 4%, sponsored 8% and other expenditure 8%. So this is how the payment is structured. Okay, so we understood what are the ways in which we are receiving the money and also how it is been spent. Okay, if you see the major items of the expenditure where it has been spent more preference is given to the defense, then the rural development, home affairs, agricultural and allied activity, education, health, urban development, IT and telecom, energy, commerce and industry, social welfare and scientific department. These are the sectors wherein which the amount has been spent. Okay. Let us just discuss about this union budget, how the journey of development is planned. See, there are 4 engines which is given in a union budget where they are concentrated upon. The first one is the agriculture, second is MSME, third one is investment and export. These are all happening through the fuel, the reforms, the strategies, the policies which are coming, and guiding the spirit is inclusivity, it including all the areas or the classes of the society, and the ultimate goal, the destiny is Vikasit Bharat. What do you mean by Vikasit Bharat? Vikasit Bharat, becoming India a developed nation in the year 2047. That is the goal kept in mind while drafting this union budget. And one quote has been given by the finance minister: a country is not just its soil, a country is its people. So, more importance is given to the people of the country. It's not only the soil, it constitutes people. If you go back to the meaning of this quote, they say this line stands in line with the aim of encompassing zero poverty. With this philosophy, the government vision to Vikasit Bharat, the development India, includes eradicating power, ensuring 100% quality education, providing affordable comprehensive health care, developing skilled workforce, increasing women's participation in the economy 70%, strengthening India's agricultural sector, make it food basket of the world. So, more concentration here if you see, they have given like eradicating the poverty and good education and healthcare in a affordable prices, and making all the individual as a skilled individual, so that the entire development of the nation will happen in a right direction. Coming to the first engine of the agriculture, why more emphasize or priority given to the agriculture? See, this is when it comes to India, in agricultural like food and grains, milk, cotton, horticulture, sugar, spices, cropland, livestock. Largest is milk is the largest. India is the largest country where milk is produced. Cotton also second largest. Sugar also is the largest. Spices the largest. Cropland also largest. Livestock also largest. So we have the capability. India has the capability. And if you give a push to this agriculture sector, definitely it can reach that goal. Yes, this talks about some of the scheme which is given to develop the agriculture, like Prime Minister Dhan Dhanya Krishi Yojana, developing agri district program, mission for cotton productivity, 5-year mission for facilitating improvement in productivity and sustainability in cotton fanning, Makana board in Bihar, and some of the enhanced credit through KCC also they were given, facilitates short-term loans for 7.7 crore farmers, fishermen and dairy farmers with enhanced loan of 5 lakh rupees. National mission on high yielding seeds, targeted development and propagation of seed with high yield, pest resistance and climate resistance. See, these are all the schemes which is taken from Government of India to just uplift the agricultural activities in India. Coming to the second engine, MSME. See, there is a revision in the classification criteria for MSME. When it comes to the classification criteria of MSME, it is two things, like one is investment and another one is turnover. So it has been increased from, for micro small enterprises, micro it has been increased from 1 to 2.5, turnover 5 to 10, small is 10, from 10 to 25, turnover is 50 to 100, and 50 from medium enterprises 50 to 125, turnover is 250 to 500. So we need to understand why these changes or revision in MSME definition which has happened. The intention of the government is more and more entities fall under this MSME and take the benefit of the schemes. So schemes is credit cards for micro enterprises, customized credit card with 5 lakh limit for micro enterprises registered in Udyam portal. In the first year, 10 lakh such cards will be issued. Scheme for first time entrepreneur for 5 lakh first time entrepreneur including women, scheduled castes and scheduled tribes, new schemes to be launched. So these are the schemes for upliftment of MSME. We saw first and second engine of the union budget. So one more pillar is investment. Investment is divided into 3 categories again. One is investment in people, investment in economy, investment in innovations. So with respect to these also, few of the schemes have been introduced. Coming to the people, 50,000 Atal Tinkering Labs in government schools, 5 national centers for skill development, as I was discussing with the people, like 5 national centers have been skill development. And economy, if you see, interest-free loan to the states up to 1.5 lakh crore, setting up urban child fund 1 lakh crore towards cities growth, water and sanitization. Innovation, if you come, centers in excellence in AI, artificial intelligence, worth 500 crores have been given, marked. Broadband connectivity in government primary secondary schools and health centers also been marked. with respect to the innovation of the investment. So that this is the third engine. Coming to the last and fourth engine is the export. So few more schemes have been introduced to uplift the exports in India. One is Export Promotion Mission, Bharat Trade Net, National Framework of GCC, Warehousing Facility for Air Cargo, where there is a perishable items which wanted to be exported. So their warehousing facility have been introduced. So these are all the on the part A. Let us go to the part B of the union budget. Part B, first let us take on the indirect taxes proposals. Coming to the indirect tax proposals, there has been rationalization of the custom tariff. There are like 7 tariff rates have been removed. Now only 8 taxes are there, including the 0 taxes. So earlier it used to be have two different multiple taxes at a multiple levels. So now those things have taken out and only now 8 tax rates are there. And similarly only one cess or surcharge per item to be levied, exempting social welfare surcharge on 82 tariff lines with cess. Even sector specific proposals, Make in India exemption to all LED, LCD TV, looms for textiles, capital goods for lithium ion battery for mobile phones. Promotion of MRO, that is maintenance, repair, operation, exemption of 10 years on goods, shipbuilding and ships for breaking extension time limit. Export of railway goods and importing for repairs. Export promotion, duty-free inputs for handicraft and leather sectors. Trade facilitation, the time limit fixed for finalization of provisional assessment, new provisions for voluntary declaration of material fact post clearance of the duty payment. Now they made without penalty. Earlier it used to have the penalty, now they have removed. So these are all these some indirect tax proposals, and apart from these removals, some of the changes which has happened in the tariffs in customs are like 36 life-saving drugs or medicines are in exempted list. Earlier it used to be charged at a duty, now it has been exempted, and 6 medicines in 5% duty. Earlier it used to have at the higher rate of custom duty, now it has been reduced to 5%. And 37 medicines and 13 new patient assistance programs in exempt list also been included. Now, very important one, let us come to the direct tax proposal. Personal tax, first let us take up the personal tax. Up to 12 lakh, there is no income tax liability, standard deduction of 75,000. Now we have a confusion here. Whoever asks, like government has said up to 12 lakh rupees, there is no taxes. But it is not so. It says, if you see the tax slabs, so tax slabs starts from 4 lakh rupees. And even they have made it now easier to remember. 4 to 8, 8 to 12, 12 to 16, 16 to 20, 20 to 24, and 24 and above. The difference class interval is 4 lakh. Even the tax rates, if you see 5%, 10%, 15%, 20%, 25, 30%. Tax slabs are starting from 4 lakh, but exemption is up to 12 lakh. How it is possible? Everybody has this doubt. But we need to understand here is, 12 lakh rupees, they have not given straight away. They have given this benefit through a rebate. Earlier also we had this rebate, 87A. So 87A up to 12 lakh if you calculate, it comes to 60,000 rupees. So that 60,000 rupees benefit is been given. It is not that If a person earns 12 lakh, it is exempted. It says through the rebate it is exempted. Taxes are calculated. Even though it is exempted, tax slabs are applicable, applied, then it comes, one amount will come. If it is lesser than 60,000, if it is more than 60,000, then there is no rebate. You need to pay 60,000 in addition. Getting it? So it is not straight away 12 lakh exemption. It is exemption through the rebate 87A. Okay. So in comparison with the last year, if you see, the last slab is here is 24 lakhs compared to this is this year. Last year, if you see 15 lakh rupees, the tax in, whatever brackets you say, that has been broadened so that it is benefit for each individual. Why? Because the 30% tax earlier used to pay, like if any individual earns more than 15 lakh rupees, then higher tax slabs used to come. Now that has been increased to 24 lakhs. So it is benefited to each individual. Whether the person is earning less or whether the person is earning more, it is benefited to everybody. And it is more benefited to middle class people. See, any person who earns monthly salary of 1 lakh rupees, straight away it is exempted. Salary, I am specifically saying it is salary. To understand how this calculation works out. So I have taken one example of 25 lakh rupees salary. A person who earns 25 lakh rupees salary. In the previous, if you see the calculation, it used to happen like 4,40,000 rupees has to be paid as per the previous years. And if you come to this year, like 25, 26, he is supposed to pay a 3,30,000 rupees. Even for the people who are earning more than 12 lakh rupees also, there is a tax benefit of 1,10,000 rupees. That is very important to note here. So as I was mentioning, like even it is beneficial for each individual. Here the person who is earning like more than 12 lakhs, like 25 lakhs, still he is getting a benefit of 1,10,000 rupees. Okay, similar to India, let us just compare with the international tax rates where India is standing. See, if you go to the developed nations like United Kingdom, France, Japan and all, the highest rate is 45%. But when it comes to the India, it is 37.5% including surcharge and education cess. And the lowest is in China like 3%, but higher slab if you go, like it is a 45%. One doubt I have, even from initially, like, why richer people are charged more taxes, why poor are not charged? Any answer? Why richer people are charged more, why poor people are not charged tax at all? Sorry? Recycled. Yes, good. But it's not recycle. Bringing equality in the societies is the key thing here. Getting it from the richer people and development and using for the poor people for the economic development of a country, that is very important. That is the reason why it is been done. There is a concept of marginal relief. Earlier it used to happen in a surcharge calculation where the income is more than 50 lakh rupees or 1 crore as the case may be. There used to be a marginal relief calculation. Just because your income is just surpassing the 12 lakh rupees, it doesn't mean that you're supposed to pay 60 lakhs. See, in my one calculation I have given, Total salary income is 12,80,000. We'll just see first without marginal relief. Standard deduction 75,000 rupees. My total taxable income has come to 12,05,000 rupees. That is just above 12 lakh rupees. As per the understanding what you say, like up to 12 lakh rupees there is zero. Only for 5,000 rupees I supposed to pay. But that is not the calculation. Calculation is to like 20,000 up to 4 to 8, 8 to 12 is 40,000, 12 lakh and above 750 rupees. For 5,000 rupees, 750. So we supposed to pay 60,750 rupees just because you earn 5,000 rupees more. Correct. Just because 5,000 rupees more, you end up paying 60,750. So that is the reason why government has come up with marginal relief. See, the word itself it says relief for the marginal income. Whatever marginal income you earn, for them the relief is given. Correct? So here the calculation, the correct calculation is like 12,05,000, 60,750 will be there. Then there is a relief 55,750, 5,000 rupees only tax payable. How come 5,000 rupees has come? You just see 12,05,000 rupees minus 12 lakh. Whatever the margin, additional income you have earned 5,000 rupees, that you supposed to pay as taxes. It's good? It's very good actually. So only the 5,000 additional income, whatever you earn, that needs to be paid as a taxes. The rest of the things will be marginal relief. The relief will be given by the government. Moving forward, let us have one more calculation. Calculation of income tax liability in case of special rates. See, I have given an example of a salary income 6,75,000 rupees. Standard deduction 75,000, 6 lakh rupees. Long-term capital gain. Long-term capital gain on equity shares. Long-term capital gain, if you hold any equity shares more than 1 year, then it will be termed as a long-term asset. If any income it arise, sale of long-term asset results into long-term capital gain. Now, for a simplicity sake, I have taken it as a 1 lakh rupees. So my total taxable income is 7 lakh rupees. So if I apply the slab rates, it comes to 10,000 rupees. Even special rate, why I told you is, for long-term capital gain, we have a special rate. It will not fall under the slabs. It will fall under the section 112A, where specific rates have been prescribed. In this case, it is 12.5%. Earlier, it used to be 10%. Previously, they have changed to 12.5%. Now, the gain is here is 1 lakh rupees. If I apply 112A, it is 12,500. Total tax liability, how much? 22,500. Rebate under section 87A, 22,500. Why? Because up to 60,000 rupees exempted. But this is not correct. Why? Because they have specifically told when we are applying section 87A, that is rebate, we should exclude the special rates. The liability which comes in a special rate, that needs to be excluded. So the correct calculation is this. 675 done, 75,000 is right, 6 lakh, 1 lakh, taxable income is 7 lakh, 10,000, 12,000, but rebate is, you have to see it here like 10,000 only. 12,500 which is charged under special rate still to be paid. So this is wrong and this is the correct one. So we have to understand here like 87A is very important, and we need to understand the slabs, where slabs are applicable. There are many instances that long-term capital gain also will be included in the slab rates. Sorry, it is not so. It should be charged separately under 12.5%. Okay? Hope you are understanding. Getting it? Coming to the reducing compliance of burden, tax payable to be allowed claim annual value of two self-occupied properties without any condition, previously condition attached. When it comes to the self-occupied property, it comes under the income from house property. Normally, income from house property are charged at the notional. Notionally means even if you have not received the rent, still you end up paying taxes. That is charged under the notional rent. You know the calculation, like it is on the standard rent, municipal rent, whichever is earlier, actual rent, whichever is earlier, and that concept it goes. Earlier what used to happen is, if you have a two self-occupied property, only one self-occupied property is allowed as an exemption, and another one used to be treated as deemed let out property. Deeming fiction used to come. Now that relaxation they have given, they have said two self-occupied property can be taken as a self-occupied and you need not pay. So one relaxation, a major relaxation is given for the individual. Reduce compliances for small charitable trust institution by increasing their period of registration from 5 years and 10 years. Normally, trust who are registered under charitable trust and institution under income tax, they used to get a exemption under section 11 and 12. And precondition for taking that exemption under section 11 and 12, they have to get registered under income tax. So earlier once if you get registered under the income tax, 5 years you need not go and renew. That 5 years have been increased to 10 years. Let us come to the TDS provision. There are some changes in the TDS provision. Tax deduction limit for the senior citizen doubled from 50,000 to 1 lakh rupees. Normally, senior citizen park their hard-earned money in the bank. So that interest portion, if it is crossing 50,000 rupees, normally bank people used to deduct TDS. And if any TDS is deducted, and they have to, senior citizen have to take those refund by filing the income tax return. Those process were there. So that amount has been increased to 50,000, from 50,000 to 1 lakh, a great relief for the senior citizens. The annual limit of 2.4 lakhs for TDS and rent increased to 6 lakh rupees. Earlier, if any payment of rent more than 2.4 lakhs, the person who is paying the rent has to deduct the TDS and remit it. What is the rate of TDS to be deducted under 194I rent? Any person? Any answer? What is the rate of TDS on the rent? Nothing. Sorry? 3%. No, it's 10%. Earlier the slab threshold was 2.4 lakh rupees. That have been increased to 6 lakh rupees. And also tax deduction for 194J increased from 30,000 to 50,000. 194J is normally payment to the professionals. Earlier it used to be 30,000 rupees. If there is any payment which is more than 30,000 needs to be deducted at again 10%. Now that has been increased to 50,000. Similarly, some of the other things, remittances under LRS, overseas tour program, that is limit, the threshold was 7 lakh rupees earlier, and now that has been increased to 10 lakh rupees. And TCS will be removed on remittance made for educational purposes when these remittances are financed through loans and specified financial institutions under ATE. So some of the threshold have been increased in the TDS provision, benefiting the individuals. And even the tax collected the sources and the purchase of goods will be removed effective from 1st of April 2025. Do you know what is the difference between TDS and TCS? In the TDS, what happens is one payer will be there, one recipient will be there. In the TDS, the person who is making the payment of amount will deduct the taxes and remaining will be paid to the recipient. But in case of TCS, the person who is selling the goods, he himself deduct the TDS of the recipient and pay to the government. The highest TDS rate will apply in case of where the taxpayer do not provide PAN. In the cases when the person who is making the payment has to collect the PAN number of the individual from whom the tax is deducted. Why? Because while filing the ETDS return, he is supposed to give that PAN so that the same credit will pass on to that party and he can take that credit while filing the income tax return. But what used to happen if he does not have the PAN? Then government has said that that point of time, higher rate of tax should be deducted. It's not 10%, it should be deducted at 20%. See, the highest rate tax apply in case of where taxpayer do not provide PAN. One more provision is there where Aadhaar and PAN, if it is not linked, even in that case also 20% used to be charged. But now that is taken out. Only where assessee does not have the PAN, then 20%, that is higher rate should be charged. So, moving on to the last thing, like extension of the time limit file updated return. When it comes to the updated return, we need to understand what are the other returns. One is original return. Original return, the return which will be filed for the first time. Original return, the due date for that is July 31st for the individual. For the companies and all different dates are there, due dates. And we need to understand what are the belated returns. Belated returns are the returns which is filed after the due date of the original return. We call it as belated return. That time frame is 31st December of that specific year. Revision return, even the revision return means original return which is revised later, that we call it as a revision return. That time due date also 31st December. What if after 31st December you wanted to file the return? What is the option available? It is updated return. So after 31st December of that specific day, if you still wanted to file the return of income, that should be filed in ITRU, that is updated return. Earlier the provision was 2 years back you can file the return. Now that has been increased to 4 years. Even when you are filing updated return, there is some amount of penalty also you are supposed to pay. For first year it is 25%. And the rest of the years, the percentage of the penalty will increase. Like I think 4 years, it is 70% of the taxes you're supposed to discharge as a penalty. This is it. Now after all, Nirmala Sitharaman says, I gave you tax reliefs, now what do you want? Correct. For major benefits have been given, especially for the middle class, and they say income. Relief has been given, now people asking income. Thank you very much for the patient listening. Thank you.
Students, you have any questions, you can ask right now. Any questions? Thank you, sir. Thanks for your exceptional presentation in this regard. Your insight and expertise made a significant impact in terms of understanding the Government of India's union budget. Now I invite Dr. R. Venkatesh to propose a vote of thanks.
Respected dignitaries on the dais, my fellow colleagues and my near and dear students. I hope all of you have enjoyed this wonderful session on Budget Analysis 2025. It is the need of the hour, and it gives me an immense pleasure to render a vote of thanks on this special occasion. First and foremost, I would like to extend my heartfelt thanks to Sri Suryakanta Devadiga, a chartered accountant from Suryakant and Company. I request our head of the department, Dr. Gururaja Rao, to render a vote of thanks by a small momentum. And one important thing I would like to express on this occasion, that Suryakanta Devadiga was my student. I am very proud and honored to say this on this special occasion. From 2000 to 2005, he studied in Vijaya Evening College. Not like you, coming in the day college. He joined evening college to support the family and to pay his own educational fees. With the inspiration of all the teachers and guidance, he took up chartered accountancy course. After completing the graduation, though he has lot of responsibilities and hurdles, he finished his chartered accountancy course and Also, company secretary course. Right now he is practicing. Not only that, he is providing opportunity to many students who would like to pursue CA as an articleship in his organization. I request all my students to take up the professional course and join the articleship with such persons so that you can enhance your knowledge. Thank you very much, sir, for your valuable time and insight. I also extend my heartfelt thanks to the management, principal, vice principal for giving this wonderful opportunity for learning and enhancing our knowledge. My special thanks to the head of the department, Sri Guru Raja Rao, and all the faculty members of Department of Commerce and other department people. And once again, I thank you very much for your patience. Last but not least, your kind cooperation, patient listening made this event wonderful success. Thank you very much for all the students who present here. I hope all of you have enjoyed this session. Thank you very much.
Students, kindly come forward for a photo. Kindly come forward. Student, assemble in your respective classes. You shall have regular classes, okay? Assemble in your classes.
Suppose a person is a doctor. He is specialized in